Hi, this is Kaiser Johnson with Liberty and Finance and Miles Franklin Precious Metals. And you're here joining us for another episode of Ask the Broker. Uh, while our guests that we have on regularly are great experts in fields of trading and market analysis and so many other global economics questions and that kind of thing, a lot of times what is really helpful to folks who call us up is to have a chance to ask us questions about the actual just in and outs of doing precious metals trades. And what we'll do here is you're welcome to drop any questions into the chat that you have for us. If you're finding yourself unable to join the chat, please just subscribe and click the notifications bell, and then you'll be able to join the chat as well. Usually, we have it; it's just open to subscribers. So if you want to join the chat, please subscribe and click the notifications bell. And I'll start out by answering some questions that we've been getting a lot recently, and then we'll go to the chat and we'll find questions that others might have here for us. So, welcome to Bill M from Florida, and so one of the big questions that we're running into right now. So we've had some really good premiums on junk silver and some specials on junk silver, and recently last week we ran a special where you could get junk silver at spot, and you could get, if you did a $500 face value bag or more, you could get it at 50 cents under spot. And a lot of people had questions about, what does that mean, $500 face value bag? Does that mean I'm spending $500 US right now? Or how is junk silver calculated? Because it's a little bit weird. Especially if you're not super familiar with it. The way that junk silver works. So junk silver refers to dimes, quarters, half dollars, and silver dollars from prior to 1965. Prior to 1965, there was actual silver in all of our coinage, and then in 1965 they took it out of there, um, you know, to, I guess, further bring us away from having actual precious metals at accessible at all times and needing to have that as part of the minting process. But the way that it was calculated when junk silver was first minted, the constitutional value of a dollar is defined by the weight of silver in there in grains, and so then in terms of troy ounces, each $1, no matter how you made the dollar, whether it was with a single silver dollar, whether it was with two half dollars, four quarters, 10 dimes, or some mix of that, five dimes and two quarters, the when it was first minted, the weight of that was 0.7234 troy ounces per $1 face value. Nowadays, because of wear and tear, every dealer, the industry standard is that we consider it to have 0.715 ounces of silver per dollar face value. And so that's now, the tricky thing is that it's priced based on the troy ounce, but then we actually sell it, and every dealer actually sells it off of dollars face value, what it looks like you're holding in coinage in your hand when you look at it. So if spot's $58 and we're pricing it at spot, every ounce you're paying $58 for that ounce. But when you look at how it's sold by the dollar face value. So what you do to calculate that is you multiply the spot price and any premium. In this case, we're talking about a $0 premium, so just the spot price, by 0.715. And that tells you how much you're paying per dollar face value. So a $500 face value bag, that's 5,000 dimes, or that's 2,000 quarters, or that's 1,000 half dollars. And with that, then you're getting 0.715 times 500, which I calculated the other day, I believe is 357 and a half ounces per $500 face value bag. So, some people will call up and they had questions. And again, junk silver is an interesting topic. If you've never, it's confusing if you've never had a lot of experience with it. And so, they go, oh, if I want to spend $500, then it's 50 cents off on the premium, or 50 cents below spot. And The question is, that's actually for a $500 face value bag, which is 357 and a half ounces. And so you're actually spending something in the neighborhood of 20 to $22,000 to get that $500 face value bag, depending on where the spot price was falling at the time. And like I said, it's easy to get confused by that because we're talking like dollars and dollars face value. Um, I know there are people in the precious metal space who will point out that the current U.S. dollar is the petrodollar. It's not the actual U.S. dollar, and so they call them Federal Reserve notes instead of calling what we're currently talking about. What we're currently using as currency, the dollar, because it doesn't match the constitutional definition of a dollar, which is defined in silver. So um, hopefully that's helpful. If you have more questions about it, you can always, when you call to make a purchase, you can always ask us, and we'll help walk you through it. But you take the spot and premium, multiply by 0.715, and that tells you what the price you're paying is per $1 face value, because there's 0.715 troy ounces per $1 face value. So that's the quick and dirty of junk silver for you there. Let's see what kind of questions we've got showing up here. Bill M from Florida says, foreign sovereigns, when premiums are lower going in, but buybacks are also lower when you sell or exchange. That's a great question. So premiums both on buying and selling, they tend to change kind of in tandem. So based on market supply and market demand, that's where we see the premiums change. So spot price, a lot of that has to do with the way that large financial institutions are trading silver as a commodity on the COMEX, or in the London exchange and the Singapore exchange, and that's where we get spot price. And every dealer calculates their own spot price based on where all those exchanges are and where they're trading at the moment. Usually most American dealers favor the COMEX, as that's the heaviest weighted part of it, but the LBMA, which is the London exchange, and the Singapore exchange, and sometimes Shanghai, and so forth. So they'll factor in other exchanges into that. So that's where we see the spot price change is based heavily on where large financial institutions are trading millions of ounces, or shorting them, or what futures they're buying, that kind of thing. And but when it comes to premiums on silver, that tends to be a direct reflection of what is the supply of that particular product in physical silver, and what is the demand in physical silver. And generally, so we've seen what we would consider generally a buyer's market still at this point, even with spot prices up high. Still a beneficial time for buyers and people who are trading, swapping from gold to silver, or from silver to a different kind of silver, different product in silver, because the premiums are low, even though the spot price is high. So it's a particularly good time to swap. You get a lot more swap power because the premium is such a small factor of the overall price of the coin that you're trading for. But it is true that means that right now, when we're selling junk silver at spot or below spot, you obviously, if you're selling junk silver to us, there has to be a margin in there for it to be something that we can even do. And so it's a few dollars below spot that you're getting on selling us junk silver. Similarly with Eagles, or any of the other products, foreign sovereigns. Right now we've got uh, a lot of them, between $3 and $4. I think maples are the highest at 450, 475, which is actually right around the same cost as if you're buying a volume of Eagles, you can actually get them at. So, and those, because of that, we're buying them at spot or a little bit below spot, because they're at a relatively low price. And in general, and maybe this is more of Bill's question here, is in general, you'll see you pay a little bit less for a foreign sovereign than you do for an eagle. Um, and then, yes, whenever you go to sell it back, if you want to trade it, or you want to just sell it and get, currency for it, then you'll generally receive lower on the buyback than you would for an eagle. And that's going to be consistent no matter what the buyback is. When right now we're buying eagles at spot to a dollar over spot on some of them, or on back dates that are out of their tubes and that kind of thing. It's a little bit less than that, but 2.5 years ago, March, April, May of 2023, when there were all the bank closures, Silicon Valley Bank went under, and that cascaded to multiple bank closures per day for about a month and a half straight. That we saw this huge demand for silver eagles and for junk silver. Silver eagles, we ended up we were the best lowest premiums on the market of any of the bullion dealers out there, and we were selling them at $15.50 over spot. We were buying them at $12.50 over spot. Right now, we're buying them at right around spot because of where the demand is. But at that time too, if you looked at, for instance, Canadian maples, those were selling at like $8 or $9 above spot because there was a high demand for them because the eagles were in such high demand that the premium got to be a little bit wild. But there, we were buying those at $3, $4 over spot to sell them at $8 or $9 over spot. So that's generally something you're going to see. It's almost always the case that you'll get if you pay more to get a silver eagle, you will eventually, if you want to do the other side of a transaction, you want to sell a silver eagle, you're going to receive a higher premium on the buyback than you would doing a maple or a Philharmonic or a Krugerrand or something like that. So I think we covered most of the aspects of that question there. So, buying mostly junk silver, yeah. To my mind, it's junk silver. We're hearing stories about some dealers that are taking in junk silver and just melting it down when they buy it, and melting it down into it and refining it into silver bars or that kind of thing. I'm still very much of the opinion, and I don't ever speculate. I don't give advice to as far as financial advice, because I'm not a financial advisor, but I can tell you on my own side of things, I think it's still very valuable to have junk silver. Certainly, there's the question that's always there of if it came to trading in silver, if we experience some kind of a currency crisis or something like that, that junk silver would be easier to trade in than whole ounces of silver or than in kilo bars of silver or that kind of thing. And the other thing that I like about junk silver is that in the past, uh, when we've seen high demand for silver, like 2.5 years ago here, and in 2020, 2021, we we generally see the junk silver trades above the cost of just regular bullion. Right now, it's trading well below the cost of regular bullion, and so for myself, I have it not just as a safety net in case something there was a currency crisis or something like that, or I needed to transact in junk silver. But I also enjoy having it because it does afford me an opportunity to maybe in the future speculate using the premium if we see something like what happened 2.5 years ago, or what happened in uh, the beginning of 2020 and 2021, where there's this high demand and the price of eagles, and generally the price of junk silver will the premium for those will far outpace the demand premium for other products. And so something I've done before is swapped for more or less ounces based on where the premium is at. So 6 months ago, I traded a bunch of generic bullion in for silver eagles because the difference between the premiums on the buyback and then the purchase was very minimal, and so it was a good time to swap into that. And it's still an okay time to do that. There are other swaps that are a narrower margin there, but right now is a great time to swap into junk silver if that's something that you think might be of a benefit to you. And for myself, the other thing that I'm looking at is it's possible that somewhere down the road that will happen again, where there's a huge increase in the premiums. Like I said, when March of 2023, we were selling eagles at 15.50 and buying them at $12 over spot. We were selling junk silver at 12.50 and we were buying it at $9 over spot. So that would have been an opportunity where I could have, if I had a lot of junk silver then that I wanted to trade out, uh, or if it's ever to happen again, I would take some of my junk silver. I'll still maintain, like I said, I like it for the first option too, of having this fractional silver essentially that's very transactable and very liquid. So I'll always keep some junk silver, but I would probably take a large portion of it and swap to move up in ounces, and then if the premiums regularize the other way, I would swap back in to get more junk silver so that I could do that again at a later point. So let's see. What was spot when Comex had a computer overheating? We saw it go up a couple dollars over the course in just for that morning. We saw, I think it was, I'd have to look back to remember exactly. We could hop on a chart and look at that, but I think it was at 52, 53, and then jumped up to 55, 56, and then came back down, and then obviously we see it's above 50. It's around 57, 58 right now. So um 90% silver buyback is like $8 back of spot. When will premiums return for constitutional silver? It's so premiums will go back up for constitutional silver when there's demand for when there's high demand in the marketplace for that product. And so it's impossible to say, like, 1 week from now premiums are going to go sky high. But whenever there are concerns with the dollar and concerns with banks, we tend to see and have seen in the past uh, people rushing into silver eagles, junk silver. So that those tend to be the market factors that affect the premiums on junk silver. Um, and right now we're buying. I mean, certainly, I'm sure there are some places that are buying it back at $8 below spot, but I think we're around maybe $4 or $5 under spot right now. So yeah, there's always going to be like I said, a swing there, and the more volatile that we see the spot price being, which it has been pretty volatile recently, uh, that's where we'll see that there's a larger gap in premium between the buyback and the sale price of it. So. Uh, when and if gold and silver appreciate by multiples, will it be difficult to sell? I mean, here, in the last year and a half, we've seen gold and silver double. So it's not, and you can sell very easily right now. In fact, we are seeing more people sell because of the high spot price. The Right now, because we're more sellers in the marketplace and there's not as many buyers because of the high spot price, we are seeing where it's not difficult to sell, but you don't necessarily get a big premium on top of the on top of your buyback that you would get if there was this high demand for physical product like there was in 2023. And so because the spot price and the actual premiums are are determined by two pretty different and independent mechanisms: the institutional trading for spot price and the actual retail demand for specific physical products is what determines the premium price. Those can sometimes move at the same time. Sometimes they go opposite directions, and so it or sometimes they both go the same direction the other way. But they're not related directly to each other, and so it's not a there's no difficulty to sell just because the price has gone up or gone down or gone sideways. None of those really make it any more difficult to sell, but the retail demand will greatly determine the premium that you get paid, whether it's above spot, below spot, way above spot, way below spot, for the particular product that you're looking to sell and have a buyback done with. So let's see. Um, who does your hair? My sister-in-law is the one who does my hair. She's a professional hairstylist. So, um, junk silver is just fun to stack. I agree. I mean, this if you want a Scrooge McDuck experience, having just you know big canvas money sacks full of lots of coins, it's pretty fun. So let's see. What other questions? The Yes, the melting of the junk increases the value of the junk. Certainly, there's more scarcity, as Andy Schechtman says. They're not making any more of it, and so the fact that some dealers are melting it means there's less and less supply of it. So that's uh, certainly true. And let's see. Uh, I bought my junk for transactions to the bottom finally completely fall out of the economy. Yeah, that's certainly one of the main reasons, one of the big reasons to have junk is it's a very tradable and transactable kind of silver. So, can I swap from uh, Canadian maple leaves for junk silver? What would the exchange rate be? You certainly can. If you'd like, give us a call and we can work up a quote for you because you know the buyback on Canadian maples and the price of junk silver. I think last I checked, actually, I might be able to just check real quick for you here where we're roughly at. Um, at the moment, what I'm seeing is that on a swap, when you're trading from one kind into another, you get a better premium on the buyback when you're using it to then purchase something from us as well. On the buyback, you're getting 25 cents under spot at this moment. Right now, it's Thursday, December 24th, almost 2:30 p.m. Uh, Eastern time in the year 2025. And so that's where you'd be at on the buyback at the moment. But and then the swap, then you'd get a good deal on the junk silver as well. So you certainly could do that. That's like I said, that's something I did to go from bars to eagles a few months back, and right now I'm just that's buying junk silver is the is where we're at right now. Uh, Laura asks the elephant in the room: do you think they'll confiscate silver? Um, I don't think so. Me personally, I don't think so. I don't think that it makes a lot of sense. The so in the 1930s when there was a nationalization of gold and it was we were on a gold based economy, we're on the gold standard. We Everyone who did any transaction on a daily basis had contact with gold, certainly in a paper sense and but in a direct sense, and most people had daily contact with actual gold in a physical sense, and most people had it in their possession. And right now we've got less than 0.5% of everybody in the United States has any physical precious metals in their possession. And so the idea of confiscating gold or silver doesn't seem to make a lot of sense with the burden that it would be and to the government and to everybody involved for the very low level of kind of return on that. I know some people have pointed out, like, if you wanted to confiscate gold or silver, well, you'd just the government would step in and drain the COMEX or something like that. But we don't. I don't. Even that I don't think is super likely because there's lots of, especially in the digital economy that we're in right now, there's lots of easier ways for the government to seize large amounts of assets that are easier to I guess I would say defend from a legal perspective that oh, they have the right to do that, but rather than gold and silver, and with how what a limited swath of the United States population has gold and silver, and even the millions of ounces that are on the COMEX, that are deliverable from the COMEX is a pretty small amount of overall uh, asset value that the government would be able to seize. And if they wanted to, there's other things, other classes of things, real estate and so forth, that they could seize to have values. The reason it happened in the 1930s was because they wanted to revalue gold and wanted more of it to in order to do that, because they wanted to change it. And actually, they weren't revaluing gold; they were revaluing the U.S. dollar relative to gold. And so that was the reason behind it. They were able to pay a small amount to get it from people, and then said, "Oops, now it's worth about half of that." And so that's what they did in the past when we were directly tied to gold as a part of our economy, and we're not anymore. And so it doesn't make as much sense for that to happen. Is it impossible that it could happen? No, it's not impossible. It would take the changing of some laws, and it would take, again, to my mind, a pretty big that would be further down the list of emergency actions that I think would be taken. So that's why I don't think it's likely that it would happen. Again, it's not impossible. It certainly could happen, but I don't think it's highly likely. So let's see. Uh, as pre-65 US gold coins called junk gold. No. So gold was in our US coins there until 1934, and when that confiscation happened, and then there wasn't any golden coins until they started minting eagles in the uh, 80s, because it was illegal until the late 70s to hoard gold, which means what we'd call stacking, but they put this nasty sounding name to it. So it's not called junk gold because the reason it's called junk silver, is there was lots of it, and uh, it was in everything that you had, and it's commingled. It's not pure silver; it's commingled with other things. I'd say 90% silver. But again, even though it's 90% silver, the weight per $1 face value is 0.715 ounces. It's just that the remainder of it, another 10% of weight, is made up from uh, copper and nickel and zinc, I think. Whereas in the gold eagles, or excuse me, the gold liberties and the St. Gaudens liberties and the Indians that we saw uh, back, from the mid 1800s to the early 1930s, they're not pure gold. They're 0.96. The double eagle is 0.9675 dollars, excuse me, 0.9675 troy ounces per $20 coin there. And so that's the weight of that. And it is mingled with a little bit of copper and silver to give it strength. But it's not called junk silver because there wasn't as much of it. I mean, there's, millions and millions and millions of dollars of face value of junk silver that was minted, and which comes out to tens of millions of, maybe even hundreds of millions of, I'm not sure, of coins, that was minted in junk silver, whereas nothing close to that was minted in gold because of the value differential there. So generally, instead of calling it junk gold, they call it if it's not a numeric grade, if it doesn't fall under the NGC PCGS numeric grading system, MS62, MS63, MS64. Sometimes you'll see a 65, 66 of those older coins, but that's pretty rare. Those they're called semi-numismatic coins. So numismatics is the collecting of coins, and so if they're not graded, they're not numismatic coins. They're semi-numismatic. So that's where that is. Let's see. Uh, are banking regulations ever going to ease for coin dealers? I keep hearing that banks are hassling coin shop owners transacting in large cash deposits and withdrawals. So there's multiple answers to that. Um, I think it's not just, we have certainly had clients talk to us about the difficulty of sometimes of getting their own money out of the bank to do anything uh, other than maybe send a wire transfer to buy a house, where it's the bank knows that there's probably some other aspect that they're going to be holding, where they still get to play with a large portion of your money. When you're taking it out of the banking system by buying physical metals, or even to make a purchase, banks are a lot more hesitant uh, to let go of it, and it's not the right thing for them to do. And sometimes it takes um, talking to the bank manager, or threatening to report them to the FDIC, or various authorities about that handle banking, for you to do a large, usually the times that people run into it is when they want to send us a wire for a couple $1 million, or that kind of thing. We don't see that happening when it comes to sending us a wire for $50,000, $100,000, generally. um, unless you've just deposited money into the bank and they're going, hang on, wait, wait, wait. You got to wait for it to let us check and make sure it's all real money before you, take it out of there. And so that's where we see that happen most often. There, since the early 2000s, there's, anti-money laundering restrictions have said that you can't do a cash transaction, and that just means like literal cash or money order. Can't do that in excess of $10,000 without filing a an IRS form that says, "Hey, this cash transaction happened." But that's not just with a precious metals dealer. That's with any large transaction where something comes out of the U.S. monetary system and isn't, they essentially, the idea is you got to, where there wouldn't be a paper trail for large sums of money moving, you've got to create a paper trail. So you don't see that happen when you pay by wire, when you pay by check, when you pay by ACH, even when you pay by cashier's check. Uh, all of those have, they create a paper trail. So because there's recording that is done of those transactions. So there's no need for reporting to be done, and that's what happens on the purchase side. So at Miles Franklin, we just don't tend to accept, uh, well, we don't do cash transactions. We do accept money orders, but we won't accept them in excess of $10,000 on singular related purchases, because we don't want to get into the reporting aspect of that. We'd rather just help you get the precious metals that you need, and do a good deal by you. But the like I said, the a wire transfer, ACH, checking, personal check, those are all ways that you can transact in much larger amounts, and there's no reporting that goes along with that. So, yeah, let's see. What do we have next? And we'll be wrapping up here in the next couple minutes. So let me see if I can quick get to a couple more uh, questions. Let's see. Digger105337 asks, "What spot price do you use?" And the question, I mentioned it a little bit earlier, but I'll mention it again. Is every dealer calculates their own spot price. It's usually heavily based on where the COMEX is trading at, and then also influenced by where the LBMA is trading at and where the Singapore exchange is trading at. Sometimes other exchanges factor into that as well. But you can always look on the Miles Franklin website at milesfranklin.com, and there's a ticker of the current spot price. And then when you actually want to make a transaction with us, we lock the spot price. What that means is that for your transaction, we're telling you, okay, so here's the spot price when we settled on what it was that you'd like to purchase, or that you'd like to sell. And so we're locking it. We immediately get futures to hedge against that, which is one of the reasons why once you've locked a transaction, that is a transaction that you must fulfill. Whether you're selling us something, you've got to send us those precious metals, and we will. And if you're buying something, you must finish the purchase of those precious metals. There's no cancellation of that happening. It's similar to like if you click buy on a stock or sell on a stock, that transaction is going to get filled, and you must you know either buy that stock or you must sell that stock. That's what's happening here too, is we're buying futures to hedge against movements in the market, and so there's an immediate cost there. So that's why once it's locked, you are obligated to fulfill that transaction, and so are we. We obligate ourselves to, if you're buying from us, to sell it to you at the price quoted, no matter what happens with spot or premiums afterwards, and you're obligating yourself to purchase it from us at that price, no matter what happens with spot or premiums afterwards. Same thing on a buyback. You're obligating yourself to sell it to us at that price, no matter what happens with spot or premiums afterwards. And we're obligating ourselves to purchase it from you at that price, no matter what happens with spot or premiums afterwards. So again, the actual spot price is calculated through an algorithm that is based partially on the COMEX, partially on the LBMA, partially on the Singapore exchange. But you can see where our spot price is anytime at milesfranklin.com, or you can call us up and ask, and we'll tell you. Let's see. Um, Now's the time to buy junk silver. Yep. It's it's really good prices. Uh, let's see. Oh, this is one question. So, I'm not sure how to say this. Anisan Krill 6179 mentions the reason for having copper in these gold coins is to make it more scratch resistant as a currency. That's why it was in those the numismatic and semi numismatic coins in the 1930s. That's why it's in uh, Krugerrands and Gold Eagles now. Some people ask, they call us up, and this is something we've been running into recently a lot. Donegan was telling me he's had a number of clients ask about this, and I recently had some clients ask about this about, oh, if the Gold Eagle is not pure gold, why would I want that? I don't want something that's got other stuff mixed in. It's not, is it an ounce of gold? And that's something to know is that if you compare, for instance, the gold eagle or the gold Krugerrand to something like the gold buffalo or the gold maple, those are pure gold buffalo, gold maple are pure gold. The gold buffalo is kind of the U.S.'s answer to the Canadian maple. The Canadian maple is 4/9 fine pure gold, and so they essentially did that with the buffalo as well. But the standard minted coin of the U.S. that's a gold bullion coin is the gold eagle, and it does have copper and silver in it. Or excuse me, just copper now in the modern gold eagle, and that is to make it more scratch resistant, firmer, so it's not as easy to bend and that kind of thing. But it does still have one entire troy ounce of gold in there. It just also has copper in there. And right now, at the moment, uh, Buffalo are trading higher than Eagles as far as the actual cost on them. Uh, Generally, we tend to see higher demand for Eagles than for Buffalo. So frequently they're trading at the same amount. A lot of times Eagles will cost you a little bit more, but right now Buffalo are the ones that are trading higher for whatever reason. But the the U.S. Eagle has been since it's first started being minted the most popular gold coin in the Americas. And so I think it's overall, if I'm not mistaken, it's the most in demand gold coin in the world every year since it was first made. Um, so it just overall, but yeah, so Gold Eagle, even though it's not pure gold, it's not 4/9 fine pure gold. It does have a full ounce of gold in there, and it's 91.67 percent gold, and the remaining is copper. But it still has a full ounce of gold in there, and so you're still getting the full bang for your buck that you would between that or a buffalo or a maple or that kind of thing. Let's see here. Let's see. What else have we got? And then I'll be wrapping up here in just a minute or two. So if you have really pressing questions, make sure to get them in there. One other thing I was going to make sure to uh, mention. Let's see. Uh, Two other things I was going to mention very quickly. IRAs. We've been getting a lot of questions about IRAs recently, and a lot of people. Two things here. Some people are skittish about having their money in a government subsidized account at all. And so they're looking at their IRAs and they're going, do I want this to stay in a government subsidized account, or do I just want to pay the penalties, pay the taxes, get it out of there? Or if it's a Roth IRA, pay the penalties, get it out of there. And we have had a lot of clients doing that and just cashing out their IRAs early and taking them for paying the penalty and taking metals for personal delivery. So we certainly have had that. The other thing that interests a lot of folks is having a precious metals IRA, and that's we can definitely help you with that. You can write to us at libertyandfinance@protonmail.com. Again, that's libertyandfinance@protonmail.com. And we can send you more information about setting up an IRA. You can just put IRA info in the subject line, and or you can call us at our number. I say it every every 1-888 Liberty. Um, 81 Liberty. Is that right? 1-888-81 Liberty. Hold on one second. I say it so often, and yet I'm having difficulty remembering exactly what it is. It's yeah, 888-81 Liberty, 888-815-4237. I'll put both our email address and um, our phone number in the chat there so that you can have that. But yeah, that's you can call us there or you can email us, and we will give you more information about having an IRA. Something we've been running into a lot recently is so there are a number of gold dealers that talk about specializing in IRAs, or they'll pitch themselves as, you know, like the only thing you'll ever hear about them is that you can have a gold IRA with them. Um, and you might see television advertisements with celebrities or former celebrities who are uh, mentioning what a great idea it is to get a gold IRA with this company. The A lot of times with those companies, when you call them up and you start putting together an IRA, they'll start selling you or really trying to encourage you to buy products that are weird weights, and or they're uh, graded coins that are modern bullion coins, you know, MS-70 first strike gold eagles and stuff like that, or you know, 1.5 ounce pure coins here, or a 5 ounce America the Beautiful coin, and just that the the thing to watch out for there. That's not necessarily a nefarious thing, but we found that it often serves to confuse clients who are calling in and make it much more difficult to differentiate how much of what they're purchasing is premium and how much is the intrinsic value of the coin. And so it's certainly something to be wary of when we help people do IRAs. And if you have a precious metals IRA or you want to get one set up, we can help you with that. And when we do, we tend to get you and have the same recommendations that we would have for any of our other clients who are taking precious metals for personal delivery. That you want to stay in something recognizable, where you're paying a reasonable premium, and that most of the value of the coin is in the intrinsic value of the coin, not in the premium, or this, you know, the speculative premium or that kind of thing. And so I would say that's the chief thing to look for when you're dealing with someone. And also the other thing to know is all those dealers that are advertising, they're not actually the custodian for your IRA. They'll connect you with a custodian. They'll get you hooked up there, and then tell you that you have to buy with them. You don't. You can. It's government regulated that you in fact have three separate entities that are the custodian for your IRA, that is the broker or dealer for to actually do the transactions to your IRA, and the depository for your precious metals, because ones that are in your IRA can't be held in your personal possession. They're held by a depository, but those have to be three separate entities. And so you're never when you have a precious metals IRA set up, you're never obligated to a specific broker with that. So you know, if you already have a precious metals IRA that's set up that you set up through any one of these television advertising companies, you're welcome to give us a call, and we can take a look and help you out with any transactions in there, and treat you fairly and that kind of thing. But that's something to look for, that we've seen a lot of clients calling us up and go, gosh, I think I got fleeced here. And they'll tell us, you know, oh, I was told to get these MS-70 first strike coins, and you know, I guess gold spot was, you know, around $2,000 when I got it, and I think I paid $5,000 a coin, and it's, you know, these kind of ridiculous things where they'll go, I'm not sure how much was premium. I paid like $6,000 for the coin, and it's a, you know, it's a, or no, it'd be like $8,000 for a coin, and it's a 1.5 ounce coin. So how much was that at premium? And it's this massive amount of premium on there. And so I think something to look for is if someone's trying to convince you to buy either a different weighted coin, or really hammering that you should get into a graded modern bullion coin, that, you know, Andy Schechtman calls it putting lipstick on a pig, when you've got a MS-70, you know, 2025 Eagle, that it's silly to buy a modern bullion coin at a high grade. Sometimes it can make sense to buy antique coins, numismatics and pre-numismatics at a reasonably high grade, if that's something that you want to speculate on. Those can't go in an IRA, and so that's one way that some of these companies have found to charge you these massive premiums is go, you got to get a graded coin of that's a modern bullion coin. So anyway, that's something to watch out for. Where when it's difficult to tell how much is premium and how much is the intrinsic value of the coin, we'll always talk about it in the premium is spot plus this. Whereas a lot of times, people who are trying to pull something over on you will just say, "Well, this is the cost for the coin," and they won't address spot price at all, and they won't address premium at all, and are cagey about it when you try to bring it up with them. So something to watch out for if you're calling any of these other companies. And It's something that you won't have to watch out for with us because we won't ever do it to you. So again, I will drop our email and our phone number here in the chat. Thanks for being here. Really appreciate it. And thanks everyone for listening. And we'll be doing this more often. So if you have questions that didn't get answered this time, please feel free to show up in the coming weeks and we will get your questions answered. So thank you so much for being here. Again, I'm Kaiser Johnson with Liberty and Finance and Miles Franklin Precious Metals. We're at Liberty and Finance at protonmail.com and at 888-815-4237. That's 888-81-LIBERTY if you want to reach us by phone. Thanks again for being here, and we will see you again soon.